name's Adam Chapnik. I'm from ICOInvestorTV. We are an awesome channel that brings you everything you need to know about the crypto space and investing. And how many people have ever seen it? There you go. Nice. So after this, go subscribe on YouTube and check out some of our videos. Send us suggestions for what we should cover, and we'll do that all for you, because that's what we do. Today we're going to talk about utility versus security tokens. I'm going to invite you guys, because we're so short on time, to look in your program for who these people are. I'll introduce them, but I'm not going to do the whole tell me all about your life for everybody, so that you, if you're interested, follow up later, okay? So to my left, we have the inimitable Aubrey Chernick, the founder of the aforementioned ICOInvestorTV and Security Token Academy. We have Andy Kyzyk from OTC Markets, and Kate Sills is joining us from the Tezos community. So let's start today. Oh, you all right? Cool. All right. So Aubrey, I want to start with you because you have a fascinating sort of background in terms of legitimate credibility as an entrepreneur. And you could have taken that success that you had in your life and done pretty much anything with it. But you focused on something most people have never heard of. What is it about this ICO, security tokens, all of this that is so interesting or attractive to you? What made you want to bring this knowledge to all of these people in the world beyond?
Sure. Thanks, Adam. Well, in a heartbeat, I like rooting for entrepreneurs. There's about 600,000 startups in the United States every year. And sadly, only about 3,000 of them get funded by angel investors, maybe 320 by Silicon Valley. So they're always looking for access to new capital. I had that situation when I tried to create my startup when I was 26, mainframe software, went to a banker in Toronto. He was in charge of mining and natural resources. He didn't appreciate software at all. So I know what it's like trying to raise money, you know, from organizations that don't appreciate your vision. So the great thing about the last few years is there have been alternative sources to capital. Started with equity crowdfunding.
Right.
Then went on to ICOs. I heard China was shutting down ICOs as of last September. Got really excited. I did, because I thought this is a path to respectabilities. And so we did start ICOInvestorTV back in October. But now security tokens, that's the next big thing. That's where it's going, more respectability. So I just think as this industry matures, regulated and advanced security tokens, that's definitely the way of the future.
Got it. So your thing is all about kind of helping people have access to capital that you didn't have the benefit of having. Is that right?
Exactly.
And whether it's in Kyrgyzstan or wherever, with this new age, this is what you see as possible.
Well, there is a worldwide phenomenon. Basically, obviously, if you look at the SEC regulations, it's focused on the United States.
Right.
So the issue of regulatory respectability, you might say, is mostly right now a U.S. phenomena. So when we're taking a look right now at STO security token offerings, that respectability, that's really a U.S. phenomena. There's maybe 20 other countries through their regulatory journey are trying to figure out what's called KYC, AML aspects of cross-border trading. So right now, we're focused a little bit more on ICOs or STOs in the U.S. using regulatory exemptions in terms of their offering.
Right, great. So there's something called the Howey test. Has anyone heard of the Howey test? Okay, so the Howey test is, and I'm not an attorney, I guess I should say that for some reason, but the Howey test is sort of the best we have to go on right now about what is and isn't a security. Check me if I'm wrong. Anybody and any attorney in the house, just stand up and shout at me. It comes from around, I think it was 1946. And what it said was that something is a security if it includes, I'm not reading, this is entirely from memory, expectations of profits from a common enterprise, and it depends solely on the efforts of a third party. So if you're investing in something that fits those three boxes, you can pretty much expect that it is a security. I wanted to say that as a way of a filter to listen to what we're saying through the next 28 minutes, let's say. So bearing in mind, it's utility versus security. The Howey test is sort of the best thing we have to go on until they make something better. Now, Andy, you have some pretty interesting observations about this application of the Howey test to the question of utility versus security. It might not be that simple.
No, it's not. You know, OTC Markets trades legal securities through regulated broker-dealers. So I come from the traditional model of capital markets. And if you look at 85 years of regulatory oversight by the SEC, their main interest has been to protect the public interest and prevent fraud. So what is the basis of the security? How do you create compliance, verification of third parties, firm obligations to meet quote requirements, audit trails of those participants you're trading with? And I think that all these rules have come into place from the quality of data that has come about. So how do you, if you look at the value chain, nothing has changed in the trading environment. You can price an asset and you can trade an asset. But when you step in between that, how can you go out and market the asset, okay? Can I market it to a widowed grandmother, okay? Which is generally the term used, which means she might not understand to buy it. Let me put it into the other side is, what do you do? How do you feel the next morning when you've invested $10,000 into a crypto asset to find that it's been hacked and you have $0? Do you turn to your wife and say, honey, I just lost $10,000? You know, you see blood, you want rescission risk, you want to sue somebody. And I think that the infrastructure of the securities industry has built a lot of these factors into play. And I want you to take a step back and just think, what's the risk? How do you price the risk? And how do you transfer the asset to buyer, from buyer to seller in a safe mechanism? And I think that those have kind of pretty well been standardized.
Yeah, for sure. And so from the past till now, we have here in the US at least something called the Securities and Exchange Commission, which is sort of the epitome of a centralized regulator. So Kate, you and I would say probably, I'm going to guess, the whole Tezos community would probably agree that maybe there's even another way. It's not as cut and dry as the only way to govern the behavior of actors is through a centralized regulator. What's another way?
Sure. So my parents are organic farmers, and I think the California Certified Organic Farmer Association shows a good way to go about it. So at the very beginning, in the 80s and the 90s, the farmers actually were able to audit each other. And so I think, you know, that's an example of a voluntary kind of regulatory system, where at the end of it, you might have the FDA, but when it comes to people who know the industry best and who can actually, you know what's actually a good thing and a bad thing, the people themselves might be the best to do that. So I think that's just another perspective, and the industry is in its infancy, and we'll have to see what happens.
Yeah, so now sticking with Tezos for a minute, there's a ton of talk about security tokens because a lot of reasons. We've had, regulatory memos sent, there's been subpoenas and all these things, and people have freaked out, so maybe we should all be in security tokens. But Tezos did pretty good, promoting what we would all call utility tokens, right? And can you talk a little bit about what you guys do, maybe some use cases?
Sure. So Tezos is a blockchain and smart contracts platform similar to Ethereum. So we had a white paper out in 2014, and the tokens that we have are used to power the security of the blockchain, to power smart contracts and things like that. And I think there are a lot of really interesting use cases that are being built. So for instance, one thing that the early advocates of the internet were trying to do was to have online dispute resolution. But before we had blockchains, we had no way of actually enforcing any of that. So there was a organization called the Virtual Magistrate that some law professors put together in the early 90s. And they had a couple of cases, but they had to stop because no one was actually listening to what they were saying. There was no one could afford damages. So with digital currencies, we can actually do that now. And I think that's one of the really exciting use cases. Another is property title on a blockchain. So this is just using a token as if it were a deed to be able to enable secure transfer of property title.
Yeah, and then some people can get confused around that, or let's not, maybe confuse is too strong a word, but wonder around that. If it's a token, and we're talking about real estate, if you're going to buy or sell a house, isn't that me buying something that's hoping for future gain? And does that then, are we not a utility anymore? Do you have a thought on that?
Yeah, so I think, again, I'm not a lawyer, I'm not a legal scholar, but I think if you look at the people who are, there's a law professor named Joshua Fairfield who has a paper called Bit Property on this, and he advocates for the use of a token, like a non-fungible token, similar to the ERC 721 standard, I believe, to be used as a deed, basically, for property title. So there's no expectation of gains, it's just representing ownership of property.
Yeah, so this is where, I mean, if things aren't already confusing enough in this world, which, take it from me, they are, when we talk about the non-fungible token, you want to dive into that a little bit, because that addresses some of the other things that I know Andy's talked about what is a commodity, how is this all going to be regulated? What does a non-fungible token mean?
Sure. So I think the best thing to compare it to is the ERC20 tokens, which are fungible. And fungibility just means that it's indistinguishable from another version of it. So like cash, for instance, is fungible, right? Like $20, a certain bill is no different than any other bill in terms of its usability, right? But a non-fungible token can be used to identify like a specific asset. So CryptoKitties, for instance, are a good example of this that people might know of. It's kind of a toy right now, but I think it's a really good example of what could be possible to be used to, have a token to identify famous art pieces or other kinds of property.
Yeah, and so I know one of the use cases that people often complain about is, well, what about my Pokemon cards? Is that a security? Because I might sell it for future gain, and maybe it's a non-fungible token. And I think there's not, it sounds so dopey, but I don't think there's clarity around that. So, Andy, what do you think? I know we had talked about sort of the gray area between straight securities and commodities and the SEC and who governs what, and what's the situation there?
So, last week, Commissioner Clayton from the SEC announced that, is it a security or can it be a commodity? And if it's a commodity, it'll be regulated by the CFTC. So I think what you're starting to see is that in the last few years, the SEC has really gone into online public offerings, Regulation A. They've really modified their stance. They've really looked forward into kind of creating a way where this can be an asset. And in terms of how that asset can be owned, traded, and held, your traditional problem with equity securities has always been, how do you buy it, trade it, custodize it, and clear it, and put it into your E-Trade account? Well, if I look at, we worked with the Grayscale team to create GBTC. So GBTC is a Bitcoin investment trust. So in 2013, the fund raised money through private investors. And then once the legal restrictions were lifted from that, they wanted to have a public market so they can have a repatriation of that capital. So we work with Grayscale to establish and create a what I would call a grantor's trust, which gives you exposure to that asset without having to hold it. And what it's interesting is that it's traded at a fraction of the cost of what Bitcoin is. There's some fees involved with it, but it's the only way that we can find a way to give you clean exposure. There's 4 or 5 other products that are coming to